Okay, this time I will show you a capital budgeting problem. So how to use the financial calculator to calculate the capital budgeting problem. So this example is ABC Fitness Center is considering to purchase the tanning bed. So the tanning bed costs $10,000 and is likely to bring in after-tax cash inflows of $4,000 in the first year, $4,500 in the second year, and $10,000 in the third year, and $8,000 in the fourth year. So here we assume the required rate of the return for this project is 10%. So calculate the project NPV and IRR values. So here first we need to summarize. So the initial cash outlay is $10,000. So remember, at the beginning, the company need to spend $10,000 to purchase the equipment. So afterwards, the company will reap the benefits. That is, cash flow is followed here. So CF1, the first year $4,000, the second year $4,500, the third year is $10,000, and then the last year is $8,000. So next I will show you how to input these values into your financial calculator. So first step is always reset. So reset your financial calculator. Then push the CF button. This is for the cash flow. So for the CF0, that is negative $10,000. $10,000. So you need to input the negative sign, right? So push this button. So it has a negative value. Then push enter. So this is the initial cash outlay. And for the following years, then we just need to push this down arrow. Push the down arrow. This asks you for the cash flow in the first year. We know this one is $4,000, right? So $4,000. Push enter. Then push the down arrow. F01 asks you for the frequency. So for the $4,000 occurred how many times? So here it just occurred once, right? So just keep the number, push enter, then push the down arrow. And the second cash flow is $4,500. Push enter, then push the down arrow. This one occurred once, so keep the value 1, push down arrow. C03, that is for the cash flow in the third year, that is 10,000. Then push enter, push the down arrow. Confirm. This cash flow only occurred once, so push enter, push the down arrow. Then for the last one, $8,000. $8,000, then push enter, push the down arrow. This only occurred once, so keep this one values. So at this moment, we have finished to input the cash flow informations. Next step, we just need to do the calculation. So first we calculate the NPV value. To calculate the NPV value, push the button here, push NPV. So it asks you for the discount rate. So the project said the discount rate is 10%, right? So input 10%. Push enter. Then push the down arrow. So this time you need to push the CPT compute. Then got NPV value. So this one tells you the NPV value is $10,332.63. So this one is a positive number. If you want to calculate RRR, then you can just continue the calculation because all the cash flows, the information is still stored in this financial calculator. So we can just push the IRR and push the CPT. So it was an IRR rate is 44.93%. So here you need to make the decision, right? So based on the internal rate of the return, 44.93%, this is much higher than the required rate of the return, 10%. So based on the internal rate of the return criteria, then we should accept the project. If you consider for the NPV it's the same. So NPV is $10,333. So this one is also the positive NPV, right? So we should accept this project. So that is how to use your financial calculator to calculate the NPV and IRR values.